Hello everybody, this is John Osborn, and I'm the Director of Trading Operations at DailyFXHub.com, and I'd like to welcome you to our webinar for today, How to Identify Trend in Any Forex Market on Any Time Frame. So first, I need to read a disclaimer to you guys because we are going to talk about things relating to the markets, and we always have to have a disclaimer. So trading or investing carries a high level of risk and is not suitable for all persons. Before deciding to trade or invest, you should carefully consider your investment objectives, level of experience, and ability to tolerate risk. This content is subject to change at any time without notice and is provided for the sole purpose of education and assistance in making independent investment decisions. DailyFXHub.com has taken reasonable measures to ensure the accuracy of the information contained herein. However, DailyFXHub.com does not guarantee its accuracy and is not liable for any loss or damage which may result directly or indirectly from such content or from an inability to access such information or any delay in or failure of the transmission or the receipt of any instruction or notification in connection therewith. Any past performance results are shown for illustration, example only, are hypothetical, and as such have many inherent limitations. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Past performance is not necessarily indicative of future results. Okay. Well, welcome everyone. So first I want to talk a little bit about myself, since many of you don't know who I am. So my name is John Osborn. There's a picture of me in the upper right there. And my trading history, I'm a lifetime investor, and I started investing in funds in my early 20s. I took the good advice of people that I worked with at the time. They said, just start writing checks every month, get it out there. And then I started trading as a trader since in the 1990s. I've traded a whole bunch of different markets and strategies, probably many of you have also tried some of those. That includes Forex, equities, options, futures, done all the spreads, done all the condors, all that kind of stuff. I've developed indicator and automated strategies on 9 different platforms. So many of the platforms that you know, like eSignal and TradeStation, Thinkorswim, Sierra, etc. I've partnered with professional traders and institutional traders and assisted them with developing systems. And I've worked with hundreds of traders to help them be better at trading. And I think I can help you, or I know I can help you as well if you put the time in. So I have a work background as well. I'm a software engineer, and I have a background in nuclear submarine research and development. I used to work in designing next generation submarine sonar systems for systems that were 20 years out for the fleet. Then I worked in a pharmaceutical R&D area for a long time. I also taught college and taught everything from microprocessor design to how to use a computer from someone who didn't know how to even move a mouse. So I've done all that kind of teaching, and as I said, I've done trading consulting and automated trading. I'm consider myself an automated trading strategist, developing systems for trading and automated systems. So I want to give you a little bit more understanding of why I got started in trading. And one of my first jobs, in fact, it was when I working for the Navy. And I got reassigned to a new location, and I didn't have a choice in it. You might have heard something called the Base Realignment and Closure Commission, and they were closing bases after the Cold War. And I found out just one day that we knew it was coming probably, but I got paperwork and said, you need to move hour and a half, 2 hours away as far as a commute. Either pick up your family and move, or you're going to be driving that every day going back and forth, or you can quit. So I ended up leaving that job and working for a pharmaceutical company. And even there, things were good for a while, and then we had a not so great drug release or a problem with it, and they started to close sites, and pretty soon we were watching people get laid off. And it was very frustrating working in that environment. It's not a healthy environment to be in when you have that situation. So I realized that I needed to take more control of my own situation, so I wasn't dependent on either the government or dependent on the corporate world. I wanted to be able to be self-sufficient. Okay, so when you have this world of salary drops and unexpected layoffs and the cutthroat workplace, you really want to have something that can generate income, either supplemental income or to replace the income that you have in the government world. So imagine getting to a place where you don't need to worry about getting forced to up your kids out of school and have to move your family to another state, or even getting to a place where you don't need to worry about getting called into an office to tell you that you were getting laid off, even though you had great performance reviews. A lot of teams, these layoffs that we've seen were not based on performance. They were just downsizing the companies. So you didn't know, people just didn't know that these layoffs were coming. But what I realized is that if I could figure out how to trade and make enough on my own, I could actually look forward to that meeting, and because it would be like your present to leave with a little package. So the other question a lot of people have is, why do I take the time to help others learn to trade, and why am I giving away the information that I've learned? And there's several reasons. First, I've done all the things that you guys have done. I've been through all the gurus. Some of you are fresh and just trying to start out fresh here, and that's great too. But I've done all the gurus, listened to all the systems that are out there, and I realized that a lot of the entities that are out there aren't really teaching how to trade. They're focusing more on how to use the indicators that they're selling. And I really want to help people understand what's happening behind price so they can make sense of what's happening when price moves. Because once someone learns what makes sense and how to anticipate that expected move, they can increase their confidence in both entering and exiting trades, and they're going to be better at trading and improve their bottom line. So another key part of it is I just have a history of helping others, and I feel better when I help others succeed. And I want to give back for what I've learned in my successes in the market. And I found that throughout my life, that's been a theme, that it feels good to help other people, help them understand, help them to grow. I want them to learn how to do things themselves and grow their confidence. And in turn, they can do the same for their kids and their friends and others. So I think I can make a difference in helping people and make things better, because people can do things with their new lives with more time to spend with their family, or to spend time with charities or churches or whatever is important to you. So I'm hoping and looking forward to helping you do that if you decide to do that, and I hope you will. So let me ask you a little bit about your trading. Where are you now? You can go ahead and type in an answer here if you'd like. I would say that you're in one of three categories. You're either making money and you want to do even better. You could be breaking even. In other words, you could be you have some great trade and you're starting to build up a profit only to give it back in the market, and you're hopefully at least breaking even. But many of you, in fact most traders, are losing, and it's not because you're not working hard at it. And that's what's frustrating, because you do all this hard work and you don't always get success even though you're working really hard. And we're used to being in a world where the harder you work, the more you get paid, it seems. And trading isn't like that. You have to know how to do it. Okay, let's see, we have making money, breaking even, losing, breaking even, losing, breaking even, making money, losing. So a lot of people are losing. That's why you're here, and you're in the right spot. Okay, and Ruben, consistently profitable. That's great to see. So it's good to see. So, all right. So a lot of people who are struggling with trying to trade end up having roadblocks. And these roadblocks are what we can work on to remove to make you a better trader. So the first one that's most difficult is the lack of knowledge. And it's probably the most important of all the roadblocks, because there's a lot to learn, but it's something that's doable. And you have to start somewhere, and you need to focus on the right things to bring you up to speed. Because if you Google about how to trade, you're going to find stuff all over the place, and it's going to be conflicting information, and it's going to be partial information, and you're not really going to have the right amount of information to get you up to speed as quickly as possible. It's not a matter of having access to it, it's figuring out what pieces of that knowledge that you need to get by. Okay? And because of all that information that's out there, a lot of people suffer from confusion. Okay? It can happen when you have too many systems to choose from, and you keep going from one guru to the next shiny object, and maybe not even giving the system that you've got a chance sometimes before you say, all right, this isn't working, I'm going to something else, and you slap down another few $100s, and pretty soon you've got all these different systems and you're combining them, and they may or may not work, and then it gets tough to figure out what's working, what you should do. You have too many indicators, and it just gets crazy and you get very confused. And relating to that, as well as having improper tools or too many. Some of the people have so many indicators in their charts, I don't see how they could make a decision. In fact, what you'll see is that we're going to get towards fewer indicators and use something that's already on the charts as an indicator that's going to tell us more information than you might have ever realized. So you have access to all kinds of amazing tools, and we do use indicators. Okay, but we use them sparingly, and we use the ones that are really important and get reinforced. Okay, so it's not just a matter of having a lot of tools, but having the right tools that's key. And finally, because of all these things, you end up lacking confidence, perhaps. And that would be because you've got so many, you don't feel that you're confident in knowledge, and you're confused about which strategy to take. You may or may not have the right things on your chart or the right amount of things on your chart to help you. And therefore, when it comes time to press the button and take the trade, it gets too hard to do. And possibly it might also be that you get in the trade and then forget your rules, if you have rules, and then exit the trade too soon and not let your winners run to make up for any losses that you have. Okay? What's important is that you have a system that you understand and that you're confident with, the right amount of tools, and that you can rely on. And then you'll be able to get your hard-earned money out of risk and at work. So I would say, unfortunately, like this little guy beaten down here, you have to think about how these roadblocks are limiting you and making you feel. And you feel like, at least the way that I felt, was you might be missing out on what others are enjoying in life. And now you're laying awake at night wondering how you can make a little more money to make a difference in your life. And are you frustrated you can't control your corporate future, and you're limited in what you can do? And are you missing out on because of time? Are you missing out on your kids' lives and unable to spend the time with them or your family? Do you have an ailing mom or dad or child that needs attention, and you're at work? You can't spend the time with them that you'd like because you can't make your own hours. Okay? And many of you are having trouble sleeping. I know I was there long ago, and not having enough money makes you wake up in the middle of the night and it's hard to go back to sleep. So it feels like you're just running inside a treadmill sometimes, just barely keeping up with all the bills, and you feel beaten down by the market, just like this little guy here. So the trick here isn't what all the different systems that are out there. We're all so busy these days with everything going on. The last thing we need is a bunch of unnecessary information that doesn't get us directly to where we want to get successful in trading. So what do we fundamentally need to know to get us to be successful in Forex trading? Well, I'm going to show you a little chart here that's going to explain what I think some of the problems are. And here in this box, this yellow box here, where we are today, or many of you are today, or many traders are, is there's no clear understanding of why markets move or when to trade, and don't have a set of rules and insight that will guide them. Well, when that happens, you become unclear as to why price moves. In other words, you have no idea which way the market's going to go. You kind of guess, you take tips from other people, you hear things, you look at a bunch of different indicators and say, I think it's going to go this way, but it's not really making sense necessarily. It seems like it's just hit or miss. And then if you can't predict where price is, you can't anticipate price because you are unclear as to why price is moving. And when that happens, you're afraid to place your trades. Or you might place trades incorrectly. You might jump in at the wrong time or chase trades and things like that. And basically, lacking that understanding of the fundamentals in price movement can create a generally unsuccessful trader, which is not making you happy. Okay? So sometimes it's just a matter of seeing things a little bit differently. Maybe just in a little bit different way. Perhaps noticing something that wasn't there before. So imagine you're driving down the road. I'm going to give you an example here. Bear with me with this example. I think you'll get the idea here. Imagine you're driving down the road and you've got some very fragile and delicate stuff in the back, say an antique grandfather clock. And you have to get that delivered in an hour to the next town over. And you've got this road ahead of you. You need to get there really fast, but you also want to be really careful where the bumps are in the road. And from a distance, this road looks relatively smooth, but as you drive, you keep feeling these almost invisible bumps in the road, and they surprise you. And you keep hearing that grandfather clock, which is fragile, making noises as you're going over the bumps. And you know you don't want to damage it. So you want to come up with a system to tell when the bump is coming. Now, is there a way to anticipate where those bumps are? Okay. So what I want to tell you is that sometimes there are ways to tell where things are that maybe you've never noticed before, and you just need someone to point it out. So here's a funny little graphic here. but it makes our point. Okay, so on the left over here, we've got our really old car. I think that's a little old Matchbox car there. And then we have a very hilly road. And it's cars like this one, especially older cars, that are leaking oil and radiator fluid, and it's just barely leaking out of the bottom, and there's little drips just hanging on the underside of the car. And as those drips build up, and when a car goes over this rise, the gravity and the force of the car rising and the gravity pulling down will pull those drips away from the car at the bumps. So you end up with these blotches of oil drips at each of the little rises. Okay? So you can start to see these oil patterns appearing on the road, because cars, after hundreds or thousands of cars pass over the hills, these little drips pass off of the car and fall on the road, and you'll see them. You'll start to notice these. And if we're observant, we'll start to see the subtle clue of dark patches as the rises in the road are there. And you can train your eye to see this, and it identifies the bumps in the road. Now, what's key is that those patches were there all along. You just needed somebody who already noticed it to point it out to you. So let's take a look at that road again. And now you can notice the red or the black oil drips in the road, and they're highlighting where the rises are in the road all the way down. So now you can anticipate where those bumps are just because somebody told you this little clue that happened to be there. Okay. Before you knew this, you're probably blind to these little clues and then didn't see the less obvious rises coming, so you weren't able to prepare for it. Now, admittedly, I've exaggerated this a bit to prove the point, but I know that when you're on the real road driving along in your car, you're going to start to notice these little patches of black on the lighter colored pavement, and it'll highlight where those hills are. And you'll see that this little extra information is there that you never noticed before. And maybe it's information that other drivers aren't noticing besides you. And that gives you a little advantage or an edge, is that you can see something that other people don't notice. It's there for everyone to see. They just don't notice it. And it's just like that in trading. You get a little bit of subtle but important extra knowledge, and that becomes your edge. And you're able to weather the bumps of the road or the chart a little bit better. Again, it was always there. You just needed someone to point it out to you. And that's where I can help. So let me give you a similar example. And we're going to talk about trend. And we're going to identify where the bumps in the charts are. And that's going to help us identify trend. So let me explain. Now, trend is in any of just one of three states. It's either up, which is called bullish, down, which is called bearish, or neutral, which is consolidation. It's not bullish, it's not bearish, so it's in consolidation. But how do you know which is which? Okay, and we're going to talk about that. So why does it even matter as far as trend? Well, it lets you anticipate price movement. Just like we could anticipate the bumps in the road, we're going to be able to look at our charts differently and see where price movement is. And that will allow us to place our money in front of moves. Now, to get a better understanding of trend, we first have to understand the concept of price pivots. Okay, and we're just going to touch on pivots here, or pivot points, and they're really quite simple. They're just the swing points in the market. They're highs and lows that stand out from the rest of the chart. They're often reversal points that you see in the chart. So price will move up and then come back down again, and that will create a pivot. So we can have a pivot high, and a pivot high is just a high like this. Okay, maybe something like that. This is the pivot high, and you'll notice that the nearby bars are lower. Their highs are lower. Okay, so this becomes a pivot high. Okay, a pivot low is similar. So we'll see price drop and then price will pull back again. This becomes the pivot low, where the nearby bars are, their nearby bar lows are higher. Okay, now it's easier for humans to see than computers. Let me just clear that out there. So you think that computers could figure it out, but this is an example where computers can't. You'll see they miss some of the pivots. It's really easy for us to see it, but this is a computer-generated pivot identifier. And you can see it's trying to find where these pivots are, but you'll notice sometimes that it doesn't find a pivot. Like you might call this a pivot, etc. So it's something you do have to train your eye on. Okay, like this one here. All right, but these are price pivots. You can see it's basically wherever you have a little spike coming out. Okay. So here's a chart of the US dollar yen. It's a daily chart, and you can see I've got the upper high, the hot pivot highs in magenta, or this pink color, and we have a pivot lows in yellow. Okay, so you can see here's a pivot high. These are candlesticks, by the way. So we use the wick of the candle, just the high point of that bar. So each of these represent one day. Okay, and then we have a high here, a low here, a high here, a low here, and you can see how we have our pivots. Okay, now remember, we want to know where these pivots are because they're going to help us identify trend. Okay, so let's talk about how we're going to use those pivots. So what we're going to do is we're going to look at each pivot high and compare it to the previous pivot high. And we're going to look at each pivot low and compare it to the previous pivot low. And then we'll compare them. If we have a higher high and a higher low, then we're trending higher. If we have a lower high and a lower low, then we're trending lower. Okay, now what do I mean by that? Well, here is a trend. Okay, as soon as we have, let's say, if here's a high, and then we have a low, okay, and then we have another high. What we're doing is we're comparing this high to this one, and this is higher. This is a higher high, and we compare this low to this one, and we have a higher low. When we have a higher high and a higher low, then we are trending higher. Not until we have both of those will we be trending higher. Okay. Similarly, if we have a lower high and a lower low, so we have a high here and a high here, we have a low here and a low here. We compare the previous high and we compare the previous low. Okay, we have a lower high right here, and we have a lower low right here. So at this point, we are trending lower. Okay. Believe it or not, it's as simple as that. It's identifying the pivots and then determining if you have a higher high and a higher low, in which case you're trending higher, and or a lower high and a lower low, in case we're trending lower. And then everything else, if it's not trending higher or trending lower, then it's in consolidation. Okay? You now have the formula for how to understand trend in any market, any time frame. This isn't just Forex. You can use this on any equities, you can use it on futures, etc. We'll be using it in Forex. But this is the formula. You identify your pivots, determine if you have a higher high and a higher low, you're trending higher, a lower high and a lower low, you're trending lower. Otherwise, you're consolidating. So let me erase those. Here's an example where we have, we're coming up into this and creating higher highs and higher lows. So here's a higher low and a higher high, so we are trending higher at that point. Here's another higher low. We're still trending higher. A higher high, still trending higher. Here's a higher low. We're just comparing the higher low to the previous one. We are trending higher. At this point, this is actually an equal high. Now make sure you see that equals okay. But right here, we ended up going lower than the previous low. This one is lower. Therefore, right at this point, once this pivot is defined, we're no longer trending higher. We are in consolidation. Then we end up with a higher high and a lower low. Okay, so now you can see how we can use our pivots to identify when we're trending or when we're consolidating. So let's take a look at this chart and figure out where we're trending. So let me go ahead and change this to a yellow so we can see it better. So you can see we're moving higher, higher high, higher low, so we're trending higher. As soon as we get a higher high and a higher low than previous, then we know we're trending higher. Here's a higher low, a higher high, higher low. So all the way through here, we are trending higher. Okay, at this point right here, what happens? Anybody see what this is? Go ahead and type it in. Is it a higher high or a lower high? Okay, it's a lower high, right? So if we have a lower high, then we know right here that we're no longer trending higher. We are actually going into consolidation. Okay, so at this point, once this pivot's defined, we are now consolidating. Okay, the trend is over. And see how we knew, how would you like to know right here on this move up in this chart that this is where the trend ended? Okay, imagine the power of that, knowing at this point, this is where you get out of the trade. Okay, now let's continue this. We have a lower high, so we're in consolidation, and then we have a, what's this one right here? This is a lower low. We have a lower high and a lower low. What does that mean? Remember our formula. Okay, it means we are trending lower. How would you like to know right here in this chart that you're trending lower once you get that pivot? Then we have a lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, all the way down here. You knew right here that the trend lower was starting. Okay, and you could take advantage of all this move lower all the way down here. Okay, until we get to right here. What's this one? Anybody know what this is? Now remember, we're comparing it to the previous low. This is a higher low, right? Which, what does that mean? Well, we need to have lower highs and lower lows to be trending lower. As soon as we get a higher low pivot like this, we know we're back into consolidation. All right, so now you know, if you split this chart up, this was the uptrend. We had a little bit of consolidation. Then we had a downtrend right up until this point right here. So you can tell right here, this was the uptrend. This was the no trade zone through here in the consolidation, waiting for the breakout. And then all down through here, we were able to take profits. Now let me ask you this. How many indicators do you see on this chart aside from these pivots? If you're saying none, the answer is correct. Right. Good, Bob. Yep, Mary. Yep, good. All right, so let's keep going here. Now, I've already outlined the trend on this chart. You can see we have a pivot here. Then we have, we'll say this is a higher high, right? We've got a higher low, a higher high, a higher low, a higher high, a higher low. And then right here, what happened? Okay, we have a lower high. And at this point, right here, we know that the uptrend is over. Okay, so let me go ahead and draw my lines here. Here is the lower high. Okay, and now what do we do? So let me clear off what I've drawn here so far, just to make it a little bit cleaner. And see. It looks like it's going to stay there. Oh well. So what we do is once we get into a lower high, now we're in a consolidation zone. Okay. So what we're going to do is look back at this previous swing high and low, and we're going to draw in lines. These blue lines represent the previous high and low. We just look back on the chart and draw it in, and that becomes our consolidation zone right through here. Now, as long as we're trading inside of this consolidation zone, as long as price is inside of here, we don't really want to trade it. We want to trade when we're trending. so we can continue with the movement and make the larger moves. We don't want to be stuck in some kind of a channel where it's not quite breaking out, it's just moving sideways through here. Okay, so what do we need to have happen? Anybody know? Right, Julie. Good, Kevin. Yep, good. Right. What we need to do is we have to wait until we have a breakout. Now look what happened with price. Price moved up here, and then it couldn't break through that resistance. Look at that resistance. Then it did it again. Moved up here, couldn't break through the resistance. Okay, made another attempt, but this time right here, what happened? We broke through this resistance. Then we came back down, retested it for a couple of bars, and then made a move higher, and then raced back down. But this time, when it broke out, guess what happened? We started to move higher. Notice here we've got higher highs and higher lows starting to form again. And as soon as we break out of this channel, this becomes the entry point for your trade. Okay, so we start trending again once we break out of the channel, and up we go. So this right here is the entry that we could be looking for once we get into a consolidation. Now sometimes it will just run on the first time out of the channel. Sometimes it'll come back and retest the top of the channel. Sometimes it'll break through and come back again. And we'll talk about techniques to be able to identify when these might happen. It's when we start to use some other indicators. But what we want to do is get our money in the way of this move once this break happens. So we have a trade area where it's okay to trade. And then we have a no trade area, which is in this consolidation that we have here. And then we have an okay to trade area again. Okay, so this is how we're going to look at our markets, by using trend. Let's look at another example here. Okay, here we have the dollar yen. You can see we're trending lower here. We've got lower highs, lower lows. And here's an example where the computer didn't pick up a pivot. Okay, and you can see that we are moving, trending lower. Okay, even here we are trending lower. But right here, what happens? What happens right at this point? And here, yes, we break up or down out of the channel. That's exactly right. So right here at this point, we have a higher low. Higher low is not part of our formula when we have trending lower. Trending lower means we have to have lower highs and lower lows. Once we have a higher low, we know we're in consolidation. Okay, so we start to trend higher. In fact, at this point, we are trending higher. And we can even draw in a line here. Now this line right here, coming up through here, is connecting these pivots along here roughly. Okay, so as price comes down through here and we start to get our consolidation, we ended up pivoting kind of sharply through here. And then we broke like this and down. Okay, this becomes a break point. In fact, we can even make a channel, like we had a breakout channel that was sideways, we can have a channel effectively that is on an angle. And we can still trade the breakout of that channel. Okay, now in this case, we broke down, came up and retested it. We talked about other potential entry points. This is really the ideal entry right here for this trade. And this is on, as you can see, this is a daily chart. So this would be a nice 1, 2, 3, 4, 5, 6, 7, 8 day move right down here. Okay, now let's continue. So price moves higher here. So at this point, what do we have here? This is still a lower high, right? We're just comparing it to this previous pivot right here. Okay, and then we have a higher low. Okay, so at this point, we start, and especially this point, this is a higher high, right? Right at this point here. So we start to see a consolidation. So what do? We draw in our consolidation lines. Okay, this time they're sideways roughly. Now here's the breakout. Okay, we break out right here and put in a new high. Now the question is, are we trending higher? All right, so let's say if this was our trending, we don't really know. Look what happened here is price came up and retested, once it broke back down through here, retested this resistance channel and bounced a little lower. Okay, and it bounced around a little bit. Okay, so what we do once that happens, we have a new consolidation, so we open up our consolidation channel a little bit more. Then we move down here, and look, we even open our consolidation channel even further. So now we have a very large consolidation channel that we're working in. And now we need to wait to break out of that. Now we just sit and wait for things to continue. Now let me zoom out a little bit here. So here is that channel. We had price coming down here. This is the same information we just saw a moment ago. We saw this mini uptrend that we had here with the break. Here was that nice trade that we had, an 8-day trend trade. We got into the first part of the consolidation. We broke above, back into that consolidation zone, created a lower one. Okay, now we extend our consolidation lines, and now we wait. Now look, price came up one more time, couldn't break above this old consolidation line, and then it did right here, at which point it went up and broke through this one. Now look at the strength of the bar that it broke through there. Okay, we put in a new high, and then what did we do? We tested the lower part. We tested this broken support. That's expected. Just like we did on the other example, we went up and retested or broke through a little bit, and we want to wait for the follow through until we'll use our indicators to help us figure out where this is, but we'll be able to identify where the entry point is on that break. Okay, and then we had this nice move up here, another one. This would be 1, 2, 3, 4, 5, 6, 7. So this would be a week and a half worth of move on a daily chart. Now, interestingly, here's another consolidation. Okay, so we can add in yet another consolidation line, another breakpoint. Each of these breakpoints here become entry points for trades, and this is all using the concept of price trend and breakouts, of horizontal breakouts and angled breakouts of channels. Now you might say this is frustrating because how come I can't just buy here and ride it all the way up? Well, each of these time become profit opportunities and new buying opportunities when we get these breakouts. And what happened after this one? Well, you can see it just ran right up. Okay, putting in higher highs, higher lows, trending higher until right here. And then we go back into a consolidation. So what we're looking for here is trend, a move higher, a nice move on a break. Then we do consolidating for a while until we can break higher, do more consolidation, break higher, and this is where our entry points are, is out of these consolidation breaks. This time we're trading with the trend, and we can anticipate where those breakpoints are going to be. And you'll notice too is the power of some of these moves, the size of the bars that actually break out. And if you're anticipating where these are, you're going to be ready. And it's quite an exciting way to see how to trade. Okay, here's another one. We're moving down, lower highs, lower lows. What does that mean? Lower highs and lower lows means you're trending lower. Okay, then we put in a higher high, and this one we're just going to go right to here because this is all, we're going to bundle this all together. And then we put in this is a lower high, and this is a higher low. Okay, so we know right here that we are consolidating. Okay, so right here we start to consolidate. And what are we looking for? Well, remember what we do is we draw in our channels, our lines, okay, and we can wait for our break. Here's the break, a retest, and off we go, trending higher. And up and up and up. Back into another consolidation here. A breakout. See the strength of the breakout when it happens? And then we begin to trend as well. And this is really just another consolidation through here. But I think you're getting the idea of how important it is to understand trend. And if you've never looked at charts this way, it's quite refreshing. It's like looking at those bumps in the road to identify where things are. So in summary, there's 4 steps here. We identify the market pivots, then we recognize trend either as higher highs and higher lows, or a series of lower highs and lower lows. We draw consolidation breakout zones around the points where we're not trending, and we wait for the breakout. And that is an example of an easier way that you might not have ever seen how to trade and how to identify exactly where those breakout points are. Now, we'll talk more about how to strengthen those breakouts and find when we're retesting, we can tell with some other indicators that we'll use that will help us understand when the breakouts, the real breakout, or not. Okay. And again, what's really cool about what you've learned here today, and if you've really grasped this, and I hope you have, this technique is universal. It applies to Forex and equities and futures. You can apply this in any way you want. So just like driving on pretty much any road, you can see those black spots in the road to tell you where the bumps are. Now you know where the bumps are and where the breakouts are in your trading. So congratulations, you now have more knowledge and understanding. And you have an understanding of trend maybe that you didn't have before, and understand that it's a simple yet powerful way to understand trend. And how I just explained that is an example of the kind of fundamental understanding you'll need to trade that gives you an edge that maybe other traders aren't seeing. It also gives you clarity that you may not have had if you're relying too much on a bunch of indicators. So this is just one of many of the things that you need to learn to be able to become an efficient and consistent trader. There's many more. And how can you learn these things? Well, remember, what we want to do is figure out this problem here, where we don't really have an understanding of why markets move or when to trade, don't have rules. Remember, that caused us to be unclear as to why price moves, therefore we can't anticipate it, and we're afraid to place trades. Well, now you have, in just about 20 minutes here, a better understanding perhaps of why price moves, or at least being able to anticipate it. And now you'd be less afraid to place the trades. So we can get rid of some of that. What we want to do is develop a path to trading success, or a road to trading success. And yes, we're still going to start out without a clear understanding of why markets move or when to trade. But once we understand why the past price moves occur by looking at charts, we can then start to anticipate where the future prices can move. And then we'll have confidence to get our money out in front of those moves like we saw in those examples. And then we will become a confident, profitable trader. Now, of course, we've been talking about something called DailyFXHub, and I want to talk about that in a little bit. But I want to remind you of those roadblocks. Remember, we had those reasons holding you back. Well, some of those reasons have now just disappeared. Because if you can find that path to success, then you'll resolve your lack of knowledge, confusion, improper tools. You'll have a complete understanding of, or a more complete understanding of where your trades are your entries are going to be, and also where your exits are going to be. So you're going to be less confused when things happen, and things will start to make sense. You'll have the right tools, not too many, and it will just fit better. So I want you to imagine what would happen if those roadblocks disappeared. What would happen if someone gave you that path to success? And what would happen if you could understand the Forex market so you can use it? Okay? What would it mean to you? Okay? For some people, this might mean supplementing your income. For others, it's about replacing your income. But this time, either way, it's on your terms and on your time frame. And you can imagine being your own boss, taking days when you want, having the time to go to your kids' school plays if you can suffer through them. And having the time to take care of an ailing friend or family member. My mom and dad both needed medical attention, and because I had these skills, I was able to take the time when I needed it to be with them. And that was worth everything to me. And also, imagine having the income you might just need to take a vacation, or even the time to take a vacation. And the extra money you could have to donate to church or charity or to someone else and make a difference for someone. And imagine having the ability to teach this to your kids, and then have them do the same, and teach your family, your friends, and have other people around you having a better quality of life. What would all this be worth to you? And how much would you be willing to pay if someone could give you that? Well, what if I told you that you could get started on this without risking any of your precious capital? So I'm about to tell you about what we offer at DailyFXHub with a membership, and I'm going to go through these things. But before, you might have some questions about what this is going to cost, but I want to let you know right up front, it's free. That's right. I'm going to give you all of this stuff for free just by joining DailyFXHub. There's no obligation, no credit card needed, anything like that. A lot of people can't believe this. This is what we're offering, but it is true. So let me give you a little more information about what is in our path to success on DailyFXHub. So we start out with a 4-part Forex Essentials course, which I'm going to talk about in a little more detail here in a second. We've also included a bonus course on how to choose your Forex broker. We're going to give you a trade log template because we're going to stress in the Forex course about how important it is to track your trades and to optimize your trading. And the trade log template will help you with that. We're also going to give you weekly Forex Outlook videos. So we'll be giving a week ahead video. So by Sunday night, you'll have a video available that will go through the market majors in the Forex area, and it will identify the potential setups that we have for the upcoming week. Again, this is free. Also, monthly webinars will be held where we'll give tips and tricks and offer additional things, and that will be available to you for free each month, and we're going to be adding more and more to come. So let me talk a little bit more about that course, because I think that course is the crowning part of the free membership. So it's a 4-part Forex Essentials course. Starts out with Forex Fundamentals. Okay. By the way, each of these courses are delivered in 5 or 6 video modules, so it's broken up into logical blocks that build on each other, so you quickly learn each concept before moving on to the next. And it's a modular approach, so it makes it easy to go back and review specific topics when you need them. So it's a great review resource to reacquaint you with a topic when you need it. So let me dive in a little more. These Forex Fundamentals, I illustrate why Forex is such a great trading market for just about everyone, and explain what Forex is and identify which currencies you want to trade, which is important. You want to trade the right currencies, not just all of them. Some of them you want to stay clear of, and I'll explain why. We're also going to cover market timing, which will identify the best times to be trading Forex, and we'll introduce the basics of charting in Course 1. In Course 2, we get into more about charting details. We'll begin by looking at what drives a Forex trade, that is, what makes the Forex markets move. And we'll cover the concepts around trade sizing, price movement, and how to work with your broker to get the best prices you want in your trading. We'll focus on placing Forex orders and identify the kinds of orders that are available and which ones you'll want to use. And we'll walk through an example trade and show how it's done, and then we'll walk back through that same example and illustrate how the whole process can be simplified and more automated to make it even easier to trade. And that'll become part of your regular routine. Now here's an really interesting module here is the Forex Price Action Fundamentals, and that gives you an introductory understanding of how and why price moves. Now we've gotten a example of that in today's training where we understood trend, and that is covered again in Course 3 along with other parts, but we'll reinforce what you learned here today and add on to that in Course 3. So you'll understand why you have to keep the big picture in mind and the importance of finding where those pivots are and how to identify trend. We'll talk more and more about that. And we'll also discuss more details about support, resistance, and trend lines, and how to identify breakpoints for entries and exits in your trading. So it's these type of topics that I think are the secret sauce behind trading. And that secret is actually knowledge, which you're going to begin gaining through this course. And you'll have knowledge about how price moves. Needless to say, that's my favorite course, Course 3. Finally, we have the 4th course, which is optimizing your Forex trading. And once we get the fundamentals down, we need to start to figure out how to make that better, how to improve upon it. So we talk about the importance of having a trading plan and a system that you'll trade by. So we'll identify what goes into a trade, what's into a trade plan, and what's an essential part of trade optimization. We'll also review how to use your trade plan and trade log together to try to optimize and improve your trading at the right intervals. We'll talk about the importance of practicing and how you can trade with zero risk and get all the trading you need and practice in without risking any dollars. And finally, we'll discuss the importance of being systematic in your trading and erasing the emotion from your trading and get closer to mimicking what professional traders do. I also mentioned that you get a bonus course, which is choosing your Forex broker. This one's important because even if you have a current broker, you might find that they're not providing you with what you need. So I'm going to go through a bunch of topics that will identify the things that you might want to have in your broker so you can compare one to the other so they meet your needs. This way you'll start off with a broker that fits your style and delivers what you're looking at from the outset. Again, if you already have a broker, this is still useful. You might want to consider moving to another one. For example, you might want to trade in an IRA, and some brokers are more lenient about what you can do in an IRA than others, even though the law permits you to do it. Some brokers won't let you do certain things. Okay, so there's some benefits to that, just to finding the right one. So again, here's what you get with the free membership. You get the Forex Essentials course series, and I value that, and we value that at $4.99, which is actually a really good price. The choosing your Forex broker module at $39, the trade log template also at $39. Those weekly Forex Outlook videos, they'll just go on forever as long as you stay a member, and those are worth at least $2.99 a year. And the monthly webinars as well, where you'll learn more new things. So we put a price on this, trying to evaluate that for the first year at $11.75. Remember, you're not paying that though, you're getting it for free. Okay, so you're probably asking, how do I join? Well, here's a picture of our website homepage, DailyFXHub.com, and there's a button over on the right here that says join for free. I've circled it. Okay, and you just go ahead and click that button, and you'll log in and give a couple of pieces of information. Like I said, there's no credit card. This is legit. Some people were saying, this doesn't seem right. What am I going to get out of it, or why do I do it? And I will say that all the information that you've seen there is free and free for life. Okay. Now we do offer a pro version, but it's just $20 a month. And if you at some point feel that you got a lot of value out of what you got from the free part, you can always upgrade to the pro version. Okay, but it's, like I said, it's just $20 a month for that. But there's plenty of value just signing up for free. Okay, so there's no commitment or anything like that. You just jump in, and you can have immediate access to the courses as well. So if you're snowed in today somewhere, or chilly, or sick of shopping for Christmas presents, you could start the classes. Just click join free, confirm your email, and jump in. So again, no credit card. There's no time limit. Some people were asking if there's some limited time. Nope, this is going to remain free. Okay. So what's interesting now is, since you have this as a path, we've now removed your roadblocks. We've given you that path to success that you will take if you're willing to follow through and take the courses and learn this stuff. You will resolve your lack of knowledge, confusion, improper tools, and your confidence. But you'll also have other things that maybe you didn't realize will also fall like dominoes. So for example, if somehow you don't have the desire at times, once you get excited about knowing where the markets are moving, you're going to have that desire once again. It's going to be surprising. You're going to look forward to it. So desire and capital here. A lot of people don't think they have enough capital to trade. Forex is probably the best market to trade with low amounts of capital. There's no better market, in my opinion, on where to get started than Forex. And you can find the money. Believe it or not, you can get started for less than $100 to get you started. And of course, you can get started for free by using zero risk trading. Also time. By focusing on what the minimum amount of information you need to get to an understanding, then you don't have to waste your time learning all these different systems, etc. You can optimize your time by looking at the right things. And then also, when you're in trades, if you're someone like I used to be, where you suffer from patience in your trades, especially when you're in trades or waiting for the right setup. If you have confidence in your setups and a knowledge of how it works, you are going to have a lot more patience to get into trades and a lot more patience to stay in your trades. So once again, you get all of these items with your free membership. Just go to DailyFXHub.com and click on the join button, and you're in. Okay. So I wonder if any of you have any questions. Go ahead and type them in. Mary asked if I could identify pivots again. Sure, I'll put it right here. So we have a pivot. Remember, what we're looking for is if price is moving like this. Okay. What we want to do is identify where the pivots are. So what we want to really do is identify the more obvious ones. So this would be a high in this area. Here's another high over here. And we can identify a low here. So we're just looking for where those zigzag points are, okay, and pivots. I really am glad that those of you who are joining and have joined, thank you, because you guys are setting yourself on the right path. There's no gimmick here. It might sound like there is, and I don't blame you. I'd be skeptical as well, but you really are getting that for free. Let me go ahead and paste the link into chat. Hopefully that link will work from chat there, but it's https://dailyfxhub.com. It'll work with or without the S on HTTP. Oh, the formula again? Sure. Kevin, the formula is higher high plus higher low is trending higher, and lower high plus a lower low is trending lower. Everything else, if it's not number 1 or number 2, then it will be number 3, which is consolidating. And remember, consolidation is our opportunity for breakouts, whether they're on an angle, as prices is stuck in a channel. We already know what trend we are, or we already know how to identify where the trend is, and we're just going to sit and wait for that price to break out and be ready for the longer term move. Okay, and this is how you identify any trend, any market, any time frame. Thank you, Ruben. Thank you, Hugh. Any other questions? How much is it? It's zero. The cost is $0. Like I said, we do have a pro upgrade that's going to offer more things, additional training. The pro will also give you some daily video updates, so daily picks, etc. Some other things that you get in the pro version, but you don't have to pay that. You can just stay as a free member and get access to all that information that I had listed. So let me see, go back and you get all this for free. So you get the course, the Choosing Your Forex Broker module, the trade log template, weekly videos. And in fact, if you join, I've already posted the weekly video for next week. So you'll be able to immediately watch that once you're a member today and you get an outlook. I do use trend in those videos. You'll hear me talking about the videos. And you'll find out what we're looking at for next week. Yes, Betty, there is going to be possibly a little bit of a quieter week this week going into Christmas. I actually did mention that in the weekly video. the weekly outlook video. Yeah, I cover the news events that are happening in the next week, where we might see some things. I do mention that, interestingly, next Thursday and Friday we have some of the biggest news events coming up, especially 8:30 in the morning Eastern time, both on Thursday and Friday, but we're also going to have less volume as we head towards the Christmas weekend. So it'll be probably, even though the news will be light in the beginning of the week, especially on Monday, we're probably going to see a lot less volume and activity towards the end of the week. Kelly asked about the Santa Claus event. Yeah, at this time of year, you do expect to have rallies going into the market. A lot of people don't understand what the Santa Claus effect is. People think it's or it's called the Santa Claus rally. Some people think it's before Christmas. Some people think it's after Christmas. Some people think it goes into the new year. We don't worry about all those kind of things. We just look at the charts and we let it tell us what's going on and don't really care about all those things. We keep them in mind, but we let the charts tell us where the entries and exits are. It's another way that we truly simplify things. Okay. Well, I want to thank everyone here. I hope you did learn something. I always try to make sure that there's something of value that you can learn from a presentation. I really appreciated your time. I hope you're going to join the rest of your peers and jump in on the site. And like I said, if you jumped in today, you can start your training. You can look at the weekly outlook video for next week. It's all included. So there's no obligation, no credit card, just jump on. And at some point when you feel like you've gotten enough value, when you move on to the next step, you have the option to upgrade your membership. But there's plenty of great value and will continue to be great value even at the free level. All right. Well, thanks everybody. And I hope you have a great rest of your day. Take care.